Okay, traders, and welcome back to World of Trades. I'm Commander Accardi, and I have found something great for you. I've been asking, and a lot of people are asking the question, why are so many CEOs selling their stocks in this time? And I have found a great article from TipRanks, which is a webpage that I love to use, and it is from today, the 5th of January. And it's from Srileka PT. Okay, so let's read it through so you don't have to read it through. So 2021 was the year of insider selling, as many CEOs disposed of their shares. According to Bloomberg, some of the richest Americans sold off shares worth of 42 billion through early December, which was more than double the shares worth 20 billion sold off in 2020. Let's look at the reason behind this uptick in the stock sell-off and what type of insider signal it sends out to retail investors. But first, let's look at who exactly are the insiders. So, insiders are investors who have a more than 10% stake in the company and are a principal shareholder, an officer, or a director. According to the Security Exchange Commission, SEC, regulations, insiders must file forms every time they buy or sell shares. However, to prevent insiders from trading shares using non-public information to which they have access, the SEC prohibits insiders from disposing of shares within 6 months of purchasing them. Let's us analyze some of these insider transactions by company CEOs and the possible reasons behind this sell-off. Of course, one reason can be that the stock actually got inflated. Let's look at Tesla. Elon Musk, the CEO of Tesla and considered the richest person in the world, has been on a stock selling spree. In November, the CEO took a poll on Twitter asking people whether he should sell 10% of his Tesla shares to pay taxes. When a majority of Twitter users voted yes, Musk began offloading his stock. On December 29, the CEO stated in an interview the Babylon Bee, as cited in CNBC, I sold enough stock to get around 10% plus the option exercise stuff, and I tried to be extremely literal here. Musk sold another almost 1 million shares on December 29 at a worth of 1.2 billion, taking the total shares sold in 2021 to a value of 10.6 billion. What's more, Musk also exercised options to buy around 1.6 million shares at an exercise price of $6.24 per share. Oh my god. This is the first time that Musk has sold his shares since 2016, according to Bloomberg. Tesla's share have surged 56% in the past year. So, what prompted Musk's sell-off? Well, it could have been prompted by the billionaire's tax that was earlier proposed by Democrats. Yes, of course, that could also be one reason. In fact, the Tesla CEO tweeted following the recent sell-off that he anticipates paying more than 11 billion in taxes for 2021. Okay, so actually considering the stock stock price, but we will look let's look in trading view for Tesla. Let's look at Tesla stock, of course. Okay, let's look this here for you. So we are here at 1.2% low in the pre-market, and let's look the advanced chart. Okay, I have not been using this. Let's actually put dark color theme. I like this better. Let's appearance. Let's make the opacity. I don't like looking at these grids. Okay, so here Tesla was trending downside. Here was the time that Elon Musk was selling. I was still anticipating and wanted to see Tesla around down here to re-begin purchasing, even though it did not happen. Here we had a big surge in the price, and then we went down, and here we broke the downtrending line. Of course, we will see, we still anticipate that the stock is going to move down here to this 50-day moving average of 2071, and of course we will be buying. So we will look at the billionaire's tax proposal in more detail later in this article. So when it comes to Tesla's investor, however, they remain very positive about the stock. According to Deep Crowd Wisdom tool, which is a great tool to use, 1.7% portfolios out of 501 portfolios have upped their holding of Tesla in the past 30 days. So so people are positive about Tesla. Amazon. Jeff Bezos, the world's second richest behind Musk and the executive chairman and former CEO of Amazon, is also on a selling spree. Last year, Bezos sold shares worth of $9 billion, still below the $10 billion worth stock he sold in 2020. According to the Wall Street Journal report, the founder of Amazon sells around $10 billion worth of stocks every year to fund his space venture Blue Origin. Shares of Amazon have gone up only 4.1% in the past year, generally underperformed the US stock market indexes. Still, Wall Street analysts envisage the stock to have an upside potential of 23% to current levels, with an average Amazon price target of $4,137, and are bullish about it. They have rated the stock a strong buy based on the consensus of 30 buys. So we have a high of 4,700, a low of 3,800, and an average of 4,137. Okay, so, but Amazon stock has always been trading richly, and if Bezos actually decided to make a stock split to make it cheaper, like $40 or $400, there would be many more people that would be trading it. I mean, investing and trading. So it's about a speculative question why he's not doing that. So the next stock was Facebook, Meta Platforms. So Meta Platforms CEO Mark Zuckerberg is another one who is offloading his shares, seemingly in a hurry. According to a Bloomberg report, the CEO sold stock on almost every week last year. How much stock? Well, Zuckerberg sold around 13.8 million shares last year, landing him a windfall of 4.5 billion, almost 8 times what he sold in 2020. This was even as Facebook's prices soared 24% in the past year. Zuckerberg sold only 1.5 million shares in 2020 at a value of 405 million. So interesting, why is he doing that? What about the other corporate insiders? Well, they are also selling shares worth approximately 771,000 to be precise. In the last 3 months, indicated that insider confidence signal is negative about the stock. Maybe they are negative about the stock market, taxes, and the tax reforms and so on. Not so much about the stock, because the stock, in my opinion, is still good. Let's look at Facebook. Of course, here we have broken, you can see here that we have broken this uptrend that has been forming, and we went lower to 299. So at 300, that there the buyers came back in to save the day, and we moved back up. Here we have an interesting place, and if the market were to move up, we could still see Facebook at 350, and if we moved up this resistance line, we could see once again the 380 mark. On the other hand, the stock offloading by Zuckerberg could possibly be prompted by his aim to donate more towards the Chan Zuckerberg initiative. Around 7 years back, following the birth of his daughter, the CEO of Facebook vowed to give away 99% of his shares toward charitable causes. Yes. The negative confidence signal aside, analysts are bullish on Facebook. It is one of TipRank's top stocks with a strong buy signals, consensus rating based on 92 buys and 6 holds. The average stock predictions is of $400. So we have a potential of 20%. So their price target is 400, which we do believe that we are going to see in the future. Okay, Snapchat. Evan Spiegel, CEO of social media giant Snap, has also been selling off stock. Spiegel received 710 million before taxes last year on the sale of 10.6 million shares, more than double his proceeds of 265 million in 2020. He sold around 50 million shares in 2020. It's important here to note that corporate insiders can sell stocks either through a broker or through a 10b1 plan. The 6-10b5 ruling allows insiders to trigger a trade for the stock in which a date or price is preset for the sale of the stock. According to Wall Street Journal report, the 10b5 plans were used in 66% of stock sales in 2020, more than double the figure of 30% in 2004. And what happened in 2004? Let's see at the SPY. 2004. Two thousand 2004. Let's look here at 2004. So nothing here to see. They were offloading in 2004 and then they moved back up. Okay. So why the stock sale? An insider turning bearish on Snap, even and look at Snapchat insiders trading activity indicates that the last 3 months alone, corporate insiders have sold shares worth more than 14.8 million, indicating that the insider confidence signal on a stock is very negative. However, the most recent quarter Snap stock earning indicates that the company did well in the third quarter. Net loss improved year over year by 64% to a negative 72 million. Reported loss came in at 0.0 point per share versus analyst expectation of loss of 0.10% per share. The company reported adjusted EBITDA of 174 million, indicating an improvement of 209% from the same quarter of the previous year. Let's look at Square. Shares of Block have been in a free fall over the past year as the stock dropped around 32%. There is also the possibility that this drop stock price could have been exacerbated by the action of the founder and CEO of Block, Jack Dorsey, who sold off worth 445 million last year, more than twice the share worth 127 million that sold off in 2020. According to Block's annual report filing, Dorsey is a controlling shareholder in the company. As a result, Dorsey's sell-off can be perceived as a negative insider trading signal by retail investors. But a factor behind Dorsey's sell-off has also been his charitable ambitions. Okay. Have sold shares, but is this confidence in the company really declining? Looking at the transition that Block is currently undergoing, it doesn't seem so. In December last year, the company announced its name change from Square to Block to acknowledge the company's growth. Earlier, SQ, founded in 2009, provided an ecosystem that catered to the seller business and included commerce solutions, business software, and banking services for sellers. Now renamed Block, SQ is also ventured into cryptocurrency based on blockchain technology. Even analysts are cautiously optimistic about this transition for Block and have a moderate buy consensus rating on the stock based on 16 buys and 6 holds. The average Block stock prediction of 285 implies upside potential of 82.5 current levels. Okay, so now let's look what is the billionaire's tax proposal. So, what was the billionaire's tax that seems to have been nixed? Well, this proposal put forward the idea of taxing the top 10% wealthy individuals in the United States on unrealized capital gains, which is very important, which is probably the reason why people are selling. These unrealized capital gains are defined as the increase in the value of assets like home, business, stocks, and mutual funds gained from holding onto these assets over a period of time. This proposal planned to levy taxes on these unrealized capital gains by valuing these assets annually. Democrats had put forth this proposal in a bid to raise revenues as part of an infrastructure and environmental bill worth $2 trillion. President Biden had also proposed hiking the capital gains tax rate to 39.6%, which is a lot. Additionally, the legislation proposed a 5% tax on adjusted gross income higher than 10 million. It also includes another tax of 3% of income above 25 million. The legislation, which seems to have been axed for now, includes capital gains earned from sales of stock. It appears that the sell-off by these CEOs could have been largely prompted by an attempt to avoid a hefty tax bill this year. So, what do you think? What do you think is the reason that these CEOs and owners of these companies are actually selling? So, on one hand, it could be the fear of a declining market. It could be the fear of a bearish market or bear market incoming that will last more than 1 month or 3 months or 6 months. It could be the fear of losing money to tax, which most people believe that they can use their money better than the government. So tell me what do you think, and until next time, great trading for you.